What's going on, everyone? Hootmoney here with another video for you guys today. Today, we're going to be talking about MULN stock, Mullen Automotive. There was recently a short report released by Hindenburg Research as of yesterday, and the stock price has fallen ever since. It's down another 8% as of today. Now, however, there is reasonable suspicion to believe that this short report was insider traded by Hindenburg and other parties themselves, which is absolutely incredibly messed up. And the Department of Justice is currently investigating these types of manipulative short selling practices. So while the content of their short report may be accurate, the actual way they go about shorting this stock is insider trading, and it should be illegal, and it's messed up. And this is just one of the many different ways short sellers abuse the market. Anyways, I hope you guys enjoyed today's video. Drop a like on it if you guys did. Subscribe to the channel if y'all are new. Hit that post notification bell so you never miss my timely updates here on this channel. Also, if you want to check out Hootmoney trade alerts, we actually were able to catch on to this very early on. I noticed the increased amount of put volume. I actually secured some puts myself, and we made a 30% gain on those. I actually cut them off very early on yesterday. They'd be up even more today to make a play on SST, where we got a 200% bagger on a call option overnight. So if you guys wanted to check out Hootmoney trade alerts, it's that first link in the description. We've been on absolute fire this whole week. We've just been hitting bagger after bagger after bagger. So again, if you wanted to check that out, it's the first link below. But let's get right into it. So here's the chart of MULN. Obviously, it's down 9% today. Let's do some technical analysis here. So Market Cipher is showing that there is a red X on the daily chart, which is technically a short sell signal. They're essentially predicting that this uptrend that we've basically been seeing since the middle of March, basically been seeing since the end of February, is over. This is the first time the daily candles has produced this red X signal, which their algorithm is suggesting that there is more downside from this point. The first time that I really like to get in on these things is when you get that 4-hour red X. It usually implies that there is some more downside, although it doesn't always work out. We also noticed that the 2-hour red X was a pretty accurate signal. Pretty much every time that there was a 2-hour red X, right here, right here, right here, right here, right here, it's a decent time to get out of it. So that's the signals that I've been using. Now, in terms of where this thing can go, it is deep in the red right now, so there's always that chance for the rebound. Let's look at this hourly chart. As you guys can see, yeah, it's about to print a oversold green dot. So shorter term, I mean, just from technicals alone, I definitely see it rebounding. But we're really going to have to look at the content of that short report to see if it'll actually scratch out investors in this company, and if people are going to try to squeeze them out or not. So overall, there's definitely more downside risk. I'm not ignoring that daily chart's red X, which is a short sell signal. I'd expect at least some type of a bounce, maybe at this fib level at 218, where it can come up to the next fib level and potentially even up to this fib level. We'll see how it gets. This can violently rally when it does rally. However, longer term, I definitely do think that there is probably some more downside from this point forward. So a while back, I actually did talk about MULN and my concerns about the fundamentals of the company. I did not understand the short squeeze thesis, all right? I will admit that I was wrong about that, and it definitely did humble me a bit. However, I did think there was legitimate reason for the stock price to be down in the dumps where it was at 50 cents. Fundamentally justified. And I talked about these fundamental reasons, such as their financial statements right here, their delusion right there, and the truth, which I essentially talk about Asusa, the filings that they registered, and why all of those short exemptions were happening in the first place. And it was mostly due to the fact that, well, they just had a terrible balance sheet. They reported $360 worth of cash, and they did not have enough current assets to meet current liabilities. So just their financial statements alone were painting the picture that this might not be a great actual fundamental investment. So with that said, the company could not meet their current liabilities, right? Their current liabilities were 48 million right there. Their current assets were 23 million. So there's about $24 million that they had to come up with that they just simply did not half, and they had $360 on their balance sheet. So they had to take on this deal with Asus, which essentially just completely demolished their stock price. And that was the only way that they're going to get financing. Now, the retail community saw this as a short attack by Asus. But in my opinion, if you have to think about any investment, it's a measure of risk to reward. If you are a financial company that is giving out loans that you want to be paid back, you want to make your money back on that loan, just their financial statements alone would suggest it's extremely risky to give a loan to a company like this. So while that loan did in fact spiral their share price out of control from $15 all the way down to 50 cents and diluting their float almost 90% doing that, in my opinion, it's somewhat justified because they were going to go under, they were going to file bankruptcy, and they simply almost had no other choice but to do this. Because again, you see their total current liabilities right here. They did not have enough money to meet those in 2022. So it was either file bankruptcy or take on that crazy loan that killed their share price. So long story short, TLDR, I only really ever saw this play as a momentum play. I definitely underestimated its short squeeze ability from that. I'll admit that I was wrong about that. But am I surprised that Hindenburg released this short report? Honestly, not really whatsoever. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. They're running a promotion where you deposit $1 on their platform using the links below in the description or pinned comment section. You get up to $7,000 in free stock. You could potentially get an Apple stock, Amazon stock, Google stock, or both. You name it. It's 2 free stocks up to $3,500 each. Those links are below in the description or pinned comment section if you guys want to check it out. But with that being said, let's get right back into the video. Now, this short report highlighted a bunch of different things exposing the company. One of them is their solid state battery, which a lot of people thought was extremely great technology. They essentially said that the CEO of EV Grid, which is the company that tested their battery, said no, we would never have said that. We never did say, and certainly wouldn't have said it based on the results of testing that battery. Another interesting thing are these electric vans that Mullen had on their website. They had class 1 and class 2 commercial vans, and there's reason to believe that they had imported these from China. Exact same design, just rebranded with the Muln logo for their class 2 commercial EV van. And as you guys can see, it's nearly identical to the Tanglong's pure electric logistics vehicle that, again, they imported that from China. Same thing with their class 1 DSFK's city delivery vehicle. It's nearly identical to what they are saying is their class 1 commercial cargo van. And apparently they did the same thing in 2015 here on their website. They had the Mullen 200E, and they found this exact same vehicle on John Way. They had to use the Wayback Machine to find this one. They also had announced a purchase order valued at $60 million for the class 2 electric vehicle fleet vans, and that order came from this shop, and all it really took was a quick search on Google. Now, the company, they got the purchase order. They had a second location. Here it is, guys. Here's their second location. So I don't know about you guys, but a company operating in these 2 locations, I don't know if they can afford a $60 million purchase order. Leave your own opinion down below. So obviously we can spend all this time reading the short report. I encourage you guys to read it yourself if you are an investor in this company, because it definitely does present some genuine risks involved with investing in this company. Now, what was absolutely not okay done by Hindenburg Research is what you're seeing right here. So we started seeing a bunch of buy to open puts here on April 4th. 2022. And you can see when this occurred on April 4th, I warned everyone on Twitter. I said, warning, not sure the reasoning behind this trade, but someone with a lot of money is betting a massive amount via put options, some of which are expiring in 4 days on April 8th, 2022. And you guys can see absolutely insane amounts of premium coming in on the Muln puts right here on April 4th. Before this report was released, this was released on April 6th, and it's super insane. And obviously I'm always concerned when I do make tweets like this because of this reason. People just say stuff like this is FUD. But, you know, I wanted to help people. I genuinely want to help people, and coming after all of this activity in the put options, we get this short report. So this is how we can capitalize off this ourselves. And I actually ended up taking a put position to essentially hedge, because right now I am long on a bunch of stocks that have a bunch of short interest. It's nice to have a nice hedge in there. So I decided to take it out on Mullen, and I bought a put option for May. You can see the same thing happened here on April 5th. Tons and tons of put options were fired. Absolute insanity. Again, May 5th is right before April 6th. And then on April 6th, we saw absolute insanity again, loading up on these put options in a lot higher premium now, over $1 million there, $1 million there. But still, this does not excuse the fact that there was loads of insider trading in the days preceding this short report. So right now the DOJ is actually investigating this type of short selling practice because it's happened so many times. It happened with ticker symbol CEI as well. CEI was especially messed up because they release options on that stock, and just a few days later there's a short report that comes out. So there's definitely some collusion between the short seller and the market maker there, because why would they just randomly put options on the stock, right? So that's CEI, and then the short report comes out, and then they buy a bunch of puts, and then so there's insider trading left and right. So the Department of Justice is actually investigating Hindenburg Research themselves, and they still do it. They still do it. The Department of Justice is investigating exactly what they're doing here, and they still do it. They still freaking do it. So they don't care. This is just to make retail investors feel happy. It's like, oh, the short seller probe. Retail investors, they're going to be happy. We're protecting them. No, you're not, because they don't give an absolute fuck. They're still insider trading like absolute crazy, and they're doing it against stocks that retail investors in particular are investing. So at this point, I do think it is probably likely that MULN has peaked out, and there will be some rebounds and little squeezes along the way, in my opinion. I hope that Mullen short squeezes, because this is ridiculous. This should not happen. So I hope that this thing runs up like crazy, but it's not something I'm going to be playing a position in at this point. Honestly, I do agree with the contents of this report. Obviously, I've mentioned my concerns in the past. If you guys did not believe my concerns when I made this video got a ton of dislikes, right? Believe it now, because there's so much more proof in this actual report. So while I will stand by the fact that I do believe Mullen is not the best fundamental play, what Hindenburg Research did is absolutely screwed up. They should not be doing that. They essentially insider traded to capitalize off retail investors, and the Department of Justice, like what's their point? What's the point? They're not even going to do their job. That was just PR. That was just some BS. SEC doesn't care either. This is the market we live in, my friends. We're going to have to deal with it. We're going to have to bear with it. But we're going to be some bulls, baby. Let's go. I just came up with that on the spot. That was a terrible pun. That was an absolute terrible pun. Anyways, I hope you guys enjoyed the video. Drop a like if you guys did. Subscribe to the channel if y'all are new. Hit that post notification bell so you never miss a timely update here on this channel. If you want Hootmoney trade alerts, we did have MULN puts. We did make some money on that. We had some SST calls that we went up 200% today, up like 120% on ATER, because I used margin, 60% on shares. Hootmoney trade alerts, first link in the description down below. Check that out. If you want to sign up for Moomoo, you can get up to $7,000 in free stock as long as you deposit $1 on their platform. Those links are below in the description or pinned comment section as well. That's about it for the video. Hope you guys have enjoyed. As always, I'll be seeing you guys next time.